First up, Bernstein upgrading Caterpillar to outperform, saying concerns about the end of the machinery cycle in 2022 are overdone. The firm says Cat will be the biggest beneficiary of looser monetary policy in China, especially as industrial activity picks up post-pandemic. Bernstein's 240 a share price target implies 23% upside from here, and the broader industrial sector lagging the S&P 500 by about 10% this year. Charles, is this one thing that we can trust China on as investors, or what?
I hate to get off to a negative start, but no, absolutely not. In fact, one of the things that we're really calling out is the bubble in Chinese residential real estate, particularly construction of condominiums, which is going to come to a screeching halt. Evergrande and their competitors are just the beginning. There are going to be maybe as much as $100 billion in losses. And so we would expect China's construction activity to drop significantly. And unfortunately, Cat is going to feel that.
Marianne, China's big, as we all know. Do you agree with that? And will this have fallout for more in the industrial sector?
I think there's been a lot of speculation about the Chinese demand falling off ever since the Evergrande revelation. But we think those concerns are overdone. And the company has already reported that orders are up 10%, which can only benefit from GDP growth coming year. And then with moderated costs and share buybacks, the company should be able to reach the high end of the EPS growth estimates, or about 30%. Since the shares are trading around their 10-year average on an EV to EBITDA basis, we would expect to see some expansion in that valuation also.
Bob Bazzani, not going to ask you to be a tiebreaker here, but do you have any insight into whether investors are largely pricing in one way or the other problems in China when it comes to construction and real estate, or not?
Sure. Absolutely they are. Look what happened to Caterpillar. It just dropped in the middle of the year as concerns about China came to the fore. But China's probably only 20% of their revenues. I would focus a little bit more on, for example, the North American construction cycle, which is going to be pretty strong still. I think it seems to me it's going to be very strong. The other important thing is just focusing on the supply chain. A lot depends on how you feel about inflation. So, for example, probably 15% of Caterpillar's costs are steel costs. They went way up this year. The hope is that the steel costs are going to come way down. That would help their cost of goods sold, of course, rather dramatically. So a lot of this depends on where do you come down on the cycle. We seem to be in a mid-cycle, although it's pretty confusing. Mid-cycle, industrial names generally do pretty well in mid-cycles. We seem to be in an upswing still in construction in North America. That would benefit. I guess the overall question is, where are you on the supply chain issues? And hopefully they'll mitigate a little bit in 2022.
All right, investors will place their bets.